Are you looking to invest, or are you seeking cash for your own business? Well, a local angel fund company just might be the one for you. Last week, South Coast launched its second angel fund. And here is our interview with the fund executive, John Atkinson.
So my title is Fund Executive for South Coast Angel Fund 2. We are a member-managed, committed capital angel fund based out of New Orleans, but we cover the Gulf Coast region. We are in the process of putting together our second fund, and my role is to facilitate and administer that fund on behalf of the fund's membership.
That's great. Now, how does this differ, say, from venture capital?
So angel investing is typically and historically something that happens before a company would go to venture capital. So the typical spectrum is that a company would exhaust their personal resources and their friends and family resources, and then they would start to look outside for capital to continue to fund the idea. That's where an angel investor might come in. Historically, this has been wealthy individuals that are interested in getting involved with a company, and so they will write a check and bring expertise to that company. Over the last, I would say, 5 to 10 years, you've seen the emergence of angel groups, and particularly angel groups with increasing sophistication and size, banding together to do larger deals, more sophisticated deals, deals that might feel more like a traditional venture capital profile. We are on that spectrum, and we try to mobilize more capital than an individual angel might be able to do by themselves, as well as more expertise in both evaluating companies and helping our portfolio companies scale long term.
Okay, now the focus is, say, internet and biotech, and the fact that it's in the Gulf area, and it's going to be, say, businesses that would be associated with the Gulf Coast. Am I correct?
Sure. So the types of investments that we make are ultimately determined by the profile and composition of the membership. So, I personally do not pull the trigger on what types of investments we make. I manage that process for the membership. I think that's an important distinction to make, different from a venture capital model where you might be talking to someone who is actually employing a managed funds model and making those decisions directly. That said, my investment thesis and what I'm out talking to our members about is that the strongest entrepreneurial companies for our region are going to be the ones that dovetail with the region's legacy and emerging core competencies. That is, and where we see that is advanced manufacturing, any type of business-to-business, industrial technology type plays, biotechnology, ed tech, arts and culture to a certain extent. We're seeing some exciting things coming out of arts and culture. Businesses in those industries have a very nice sort of petri dish in which to grow in this region, and there's existing infrastructure to help them scale. It would be much harder to scale, say, a social media play here in New Orleans than it would be in a Silicon Valley, because that infrastructure is not here. Even if we were able to start one and it was the greatest idea on the planet, it would probably end up in Silicon Valley before it became the next Facebook or the next LinkedIn, just because that's where the resources are. I think this area is really in front of trends in onshoring and mass customization of manufacturing. We have a history of doing that here, and we have low-cost, underutilized infrastructure in the Deepwater Port, warehouse facilities, manufacturing infrastructure, manufacturing expertise, the number of engineers that we have, to be able to be at the forefront of that next industry rather than chasing the previous one.
So if I wanted to look at your portfolio, I guess the first funding, I would be able to go to your website and I'd be able to see the portfolio?
Yep. So the first fund was a little over $2 million. It was composed of 43 members, and we made 5 investments. Those 5 investments are all listed on our website. And I would say that they align pretty well with that thesis. We were a little heavy in the defense technology space, have 2 companies that were loosely associated with defense when the investment was made, both of which have ultimately or are considering pivoting and applying their products in more consumer-oriented areas. So, I think that has been a fairly successful investment strategy for us. That fund is also beating the expected benchmarks for an angel investment portfolio of its size and vintage. Typically, at the 2 to 3 year mark, you would expect around half of your companies to have failed. Of our 5 investments, 4 are still viable concerns and moving towards their ultimate goals, which we're very excited about.
Absolutely. Now, as far as this fund, I read that you're looking at roughly $4 million. Am I correct?
That's correct. So $4 million, about 60 people, is where we will open up. And our structure allows us to continue to raise and bring new members in even after we start looking at companies. So our hopes are that it could grow even upwards of that.
I see. So who are you trying to reach? Are you trying to reach, say, other investors? Are you trying to reach companies who or looking for growth opportunities, or both?
That's a great question. So right now, today, I'm looking primarily for people that could become, that would be interested in investing in this space. Our mission is really to educate them about the opportunities that are out there and to facilitate them getting involved. Once we hit that $4 million mark, which we anticipate getting to fairly shortly, we'll be flipping that switch, and the messaging would be more for potential investment opportunities and companies looking for investment. So right now, we have 2 upcoming events. We're calling them Angel Investing 101 seminars. They're educational seminars for accredited investors that may or may not have experience in angel investing to show them what it is and how they can get involved.